Mm. Okay, can I get a quick audio check? Good morning, it's Monday. What's up, Ivan? Good to see you here, buddy. Can you hear me? Yes, thank you. Okay, we'll get into the analysis then. So there's this breaker block from the daily chart. I refined it on a 4-hour time frame. We have this suspension block that we're currently inside of. You can grade this like that. You'll see that we reacted from the lower quadrant on a lower time frame, but I'm not going to grade it because that would be too much. We have this major sell side draw. 4-hour chart, we rejected the SIBI bearish order block and that refined breaker. We've gone down into this fair value gap right here. I want to see if we have the unction to inverse it, make it an inversion gap, but currently it's reacting really nicely, so could be either way. Going in without a bias. 1 hour, rejected the N log. We've got a nice low here, but we've also got low resistance lows there. Nothing really to support us on the discount side. Bunch of new day opening gaps, nice liquidity pools. Yeah, there's nothing of huge substance, in my opinion, that we can derive a strong bias from. But if I had to lean one way, it's to the sell side. And then the 1 minute chart, we've got a pre-market range lowest to the low. Got our pre-market high. And then we've seen a little bit of spooling. This is our London lunch low, but it's kind of the move that bleeds out of London. So even if you consider this the London low, that's fine. Asia consolidated. There's our new week opening gap. This is a fair value gap at optimal trade entry from the lowest low to the highest high of the buy side of the curve in the market make buy model, right here, at 62%. Good morning, Zach. Would it be wrong to use the 3 a.m. candle on the 4 hour as recent breaker? Let me check. 3 a.m. Are you using the CFD? Something, I don't know. Or maybe you're using UK time zone on your chart. 3 a.m. from Wednesday. No, but this is a 4 hour chart, there's no 3 a.m. candle. That's what I'm confused about. Maybe you mean a 1 hour chart. I wouldn't use that, no, that's not even a breaker. Alright, we're looking at two different things, I think. Okay, we have to wait for the 9:30 open. We could potentially see a black bell today if we take out the pre-market low. I don't mind it trading as far as this low and then reversing. If we take out the pre-market high, I don't mind it trading as far as the London high and then reversing for a black bell. Be a nice opening range gap today. So no bias currently, but I'm leaning towards sell side, but it's not a hard bias. It's just a little bit of experience and instinct, but it's kind of 50-50, but I'm leaning towards sell side, if that makes sense. I'm not going to act on that bias. I'm just going to look and wait for the chart to support it. I'll leave that to sink so far and still reverse, because this is a low that I don't mind it trading to, and then reversing. Because if it's going to take out this low, I don't mind it taking out this low as long as it shows me the black belt function. That's the simplest way I can put it. Because we have a premium opening range gap, so I can see it run away from the opening range gap, take out the pre-market low, take out this low, then reverse and go back up into it. Potentially. These are always the boring few minutes of the stream, when we just wait for nothing to happen. There's a non-farm payroll on Wednesday, the CPI on Friday. Some people are saying that's a no-news Monday with a lot of news events, you shouldn't trade it. Maybe normally you could go in with that idea, but this week, because there's non-farm payroll on Wednesday and the CPI on Friday, Monday is actually a decent day to trade. So as long as you just go in with the awareness that maybe it's not going to be super high probability, I need to just, not take anything that's not a valid setup. And you go in knowing that, okay, if the price action starts consolidating, I have to be aware that it might just turn into slop. And we all know what those environments are like. We've seen them for the last few months, where the New York session does a whole bunch of manipulation, up, down, up, down, up, down, bad price action. We know what that looks like. As long as you avoid that and you keep it in mind, you should be clear to trade today. We've got really nice ranges. Annoyingly, the move from London bled out of the London session a lot, which kind of threw off my pre-market read. The pre-market range so far has been quite nice. It's going to be interesting to see what the 930 candle does, and then we'll go off of that, along with the opening range gap. Monday, fun day. Interesting choice of colors. What's wrong with the colors? I think they're nice colors. No need to insult. Pink square, that's going to be... This one is a breaker block. On a high time frame, it's actually just light red. Pink is not a bad color. I don't like pink normally, but it looks nice on TradingView. That's a nice color. Real men can rock pink. Okay, let's see where you take us. 9:30. I'm just going to extend this forward now. Okay, that's pre-market low. We'll see if it's a black bell. If it's a liquidity run, then obviously that's not a black bell. If it's a liquidity sweep, then that's a potential black bell. But right now it's just done a touch and go with that opening range gap, where it's run up into it a few ticks and then left it. So we'll see how we can treat that move. Okay, so far it's a run. It's taken out this London low, aka the major sell side. We do have all this really nice liquidity down here, so because it's more likely to be a trending market, a black bell that's going to be towards the buy side isn't as likely to play out, but we could still look for one and read it together. $9.30 is not valid for a first presented fair value gap today, so we can't use this. It's a regular fair value gap. This is not a sweep yet to me. I still think this might run lower. I'm eyeing the black bell just for the sake of tape reading it with you, but if I'm honest, I think we're going to run a bit lower into these sell side pools. Unless that becomes an inversion fair value gap, then that's a reversal signature. We went through that in the video that I uploaded yesterday, lecture number 6. But if not, then it's continuation low. Do the first presented fair value gaps on second charts also work with a high degree? Nah, not really. The 1 minute chart's your best friend. Okay, this might become an inversion. If it does, then I think potentially a black belt to the buy side, but I wouldn't do it anyways because we're likely to trend lower in my opinion. So I wouldn't look for a black belt to the buy side today. I would just let it happen if it happens. Don't need to be part of that move. Okay, for the first presented fair value gaps on the seconds chart, say you're scalping each hour and you're using the opening range of the hour and you want to use a first presented fair value gap on a 30-second chart or a 15-second chart. It's not that you refer to it as a first presented fair value gap, but you can take buying opportunities off the first fair value gap that reacts to another PDRA that you missed. So say there's a breakaway gap and you don't have the opportunity to enter that. Like it just runs off the breakaway gap without you. Then in that case, you might go down to a 15-second chart or a 30-second chart and buy the first fair value gap or the first order block or whatever. That isn't a first presented one, it's just the first opportunity that you get to buy. So maybe that's what's confused you a little bit, if you had the explanation from ICT on that. Okay, it's just gone a little bit above 930 opening price. It's really strong here. Again, I still don't encourage a black belt today because you're going against a really strong bias. So I would not be taking this, not at all. Even if it delivers, you're going to see times where you'll make money and you're wrong, or you'll see something play out that isn't actually very likely to play out. I'm not saying it can't run into that high. I'm saying that even if it does, that's not a move with a high probability or a high degree of probability that you should be in. So better to just sit on your hands and wait for now. See, that's not an inversion fair value gap yet. That's closed inside the fair value gap. It's done buy side damage, tickled the 930 opening price. Now it's dropped. Still no first presented fair value gap. Still no first presented order block. You're better off waiting. Put some opening prices on this chart. Now we don't need those. This is one of those 50-50 spots where you see a wick does buy side damage, immediately followed by a wick that does sell side damage. I hate that pattern. I hate it because it means it's in a bit of a 50-50 situation where it's just done damage on the buy side, so you would think, okay, damage the buy side with the intent of going lower. Then it damages sell side with a wick. You would think that's the intent of going higher. So that creates a bit of a 50-50 spot where I can never read these very consistently. From this wick low being created, I'll zoom in, this wick high being created. It's one of those spots where if I'm in a trade, you have to just trust your analysis, but I'm not going to try and enter or force anything immediately after those two candles. Or even try and predict what this candle will be. Just let it form. I'll let it happen. Still no inefficiencies, so it's a low probability trading environment. Imagine you're trying to trade a black belt, or you're just chasing price here. You have to sit through it running up, running down, running up, running down, running up, running down. Those aren't regular retracements. That's, damaging, 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 damaging. That's not a comfortable environment to trade in. You don't want to chill. That reaction there. What was S&T these days? It's kind of nice. Does those wicks produce a BPR? Technically, yes. But I wouldn't look at it as a BPR. I would just look at it as... Actually, yeah, BPR. Yes. Because there's no inefficiencies around it that could nullify that idea. So yeah, BPR. Okay, that might become a first presented order block. The reason these are not first presented order blocks is because they have really long wicks. I don't trust those types of candles. Longer wicks with smaller bodies. That's a really nice displacement. Smooth highs on ES. Not so smooth on the Nasdaq, but it is still in play. If they leave this as a fair value gap, I'd like to see them leave that open. But we'll see if they do. Depends on how this body closes. Yeah, that's good enough. I would like that to be left open, because there's a really nice volume imbalance, plus it's got the high of the opening range gap that it should just be able to rally off. It's okay. It's not invalid. It's just I would have liked to see him leave that open. Still valid, but you should make sure you paid here. This is a black belt setup, but it's not one that I would have taken because it would have been against my bias. But in hindsight, with the SMT, it did make it a little stronger. I didn't see that at the start. Now that I see it, I can see that would have been a stronger trade. But I'm content with not having taken it. The ES has already delivered the black belt. And the Q hasn't taken a pre-market high yet. The reason I said make sure you paid is because this isn't relatively equal on NQ, and it hasn't been taken on NQ, when on ES it is relatively equal and it has been taken, plus this was the distribution asset, whereas NQ is not the distribution asset. You don't counter trend trade with black belt. I do sometimes, but if I'm not super confident in the price action, like if I think it's going to be really high probability price action, I'd be able to read every 1 minute candle. But this stuff, very hard to read. Like it looks really pretty, like yeah, really nice black belt, but I can't read this stuff. This is very overlapping, there's no inefficiencies, there's constant damage on both sides. That wasn't high probability price action, so I still don't think that's a good trade to have taken. Not that, it wasn't, not that it's a bad trade. In hindsight, I can see now that there's an SMT, that would have been a better trade, but I couldn't read that in the moment, so I'm fine with not having taken it. If that makes sense. Probably doesn't make sense. Yeah, exactly. Unless you got a tail soup of the SMT, new opening gap, and the sell side run, that could have been a potential entry. But other than that, I don't see anything clean enough to me here. Quite messy price action. And that comes back to what I said at the start of the stream. So no needs Monday, although there's those high impact events that would normally make today a bit of a better day. even with it being No News Monday, because the economic calendar this week is such a landmine. It's going to be so hard to predict which days are going to be higher probability and lower probability that you have to go into each day with the assumption that it's possible I get into a trade today and it just stalls and it stops respecting these arrays and my trade idea just completely falls apart. So unless there's something super clean, you have to be more hesitant and selective. Yeah. This is the environment where you have to lower your size, be content with enough. But that is the black belt model. Ring, ring, ring. I don't think I'll do a review video on that because, well, we just reviewed it here. Why did I name it black bell? It's an opening bell model, so that's where the bell comes from. Black is just that's the symbolic meaning for death. That's pretty much it. Because you sweep out a lot of the scared money, the retail concept traders who are rushing into the market. Anyone who's not really very well educated in this market, they get completely wiped out by this move. But we capitalize on that because on the other side of your black bell model, with a silver bullet, it's pretty much classic pattern reverse, and it'll start trending at what point. And even a retail trader can get into sync with it a little bit later on. Whereas with the black bell, you immediately demolish any retail trader who's in. I mean, not every retail trader, but like a regular scared money rushing into the market, doesn't really know what they're doing, uneducated trader, they immediately get wiped out. It's not like they get in and 20 minutes later they're out. They're immediately wiped out. And then it immediately runs against them. So that's the meaning for black belt. That took me like 2 seconds to come up with, by the way. I didn't put that much thought into it. I just thought, yeah, how does this look? Okay, from here now, taking the pre-market high, we have low resistance liquidity here in London. Asia was a consolidation, so I can see that being taken. I still don't see this as a high probability move, even if it wants to trade up into these highs. For me, I don't think it's a brilliant setup. So these are the days where I'll be in front of the chart for hours and hours, and I won't take a single trade. See you soon. See song. Equal Valeric has been around too many black bells. STDV, wow. That was good. That was a good try. Oh yeah, this is our first presented for Malaga. I forgot to mark that out. I'll take this off. I'll add this. Yeah, I'm very laid back today. I didn't do a very in-depth daily analysis. It was very much just these are the possible movements, but I'm not calling any one of them. And same for this session. Can you look at yours for a second? Yeah. No problem. Are you not using your own charts, Babby? Okay, we have the 950 macro. I wouldn't mind a silver bullet here. Not gonna lie. But I wouldn't look at one until it inverts this gap. Iron has pulled up an S&P which is really chopped. Ah. Do I smell institutional order flow entry drill? I think I might. You really need to see this become an inversion fair value gap before you look at anything on the sell side. If there wasn't an SMT, if there was an SMT at the highs, you could probably trust it a bit more. But because there isn't, and you've got the first presented fair value gap here, unless it inverts this, it's hard to trust. That's why I am being a deviant. Bullish order block at 0.25. Yeah, the first presented one as well. I'm not going to annotate it just because it's going to be too much, but it's nice to know about. The reason I have both of these gaps annotated is because on ES, you could see this as a common gap, or you could see this as a first presented fair value gap. It just depends on what you individually require. I like this one more because it's the larger displacement. This one's just a handle or two. It's 1.25 handles. So I'd consider this more of a common gap. Common gap rather than a nice first presented one. On the Nasdaq though, this is a nice displacement. It hasn't inverted that gap yet. So this is a 5-minute fair value gap, and we have a fresh 5-minute candle to come in after we've traded down into it on the previous 5-minute candle and rejected. So these are the situations where you could see it's becoming a bullish order block, or based on what you see on a lower time frame, you may think, okay, I want to see this become an inversion fair value gap, or I want to see it respect that 5-minute fair value gap and run up. Is that a perfect reaction? That random level. This first presented fair value gap is like made of iron because it's got the upper quadrant of the opening range gap overlaying it, and it's also got the new week opening gap overlaying it. The methodology we apply with quadrants from, graded daily wicks, you apply that also with new week opening gaps, with new day opening gaps. If like a new week opening gap is particularly large, this one isn't that large, but say this was like, if I could grab it, okay, I'll do this one. This, and then you graded that. The quadrants of this, you can treat the same as one of those daily wick quadrants that we grade. Meaning a fair value gap overlaying the high or low, or the consequent encroachment level, or the upper quadrant or lower quadrant, but I think it's better to just use the high-low consequent encroachment. That is a stronger fiduciary. Same with the order block, same with the breaker block, anything. I think we continue higher since the 15 minutes fully engulfed. 15-minute engulfed. I forgot what engulfed means. The candle pattern of engulfed. $9.30 IFG, then 25,250. I like the idea of 25,250, but in order to get that far, I don't think we retrace that far. I think really this should hold its ground and then run up to 25,250. If it's going to run up to that, I would sell for the London high. I don't require any more than that. Come back. What was your narrative today? I didn't have one. I came in 50-50. I was leaning towards sell side, I said, but I'm 50-50. Then we saw the black bell. This was kind of nice, but only nice after we looked at the S&T. Before that, I didn't see the S&T, and I really didn't like the setup. I stand by that though, because there's nothing really that clean here. So, yeah, I had no narrative today. It's a difficult week with a non-farm payroll on Wednesday, CPI on Friday, no news today. So it's better not to push it. If you don't know, you don't know, to put it simply. Very low probability 50-50. Yeah, I agree. I agree. See all these candles, they're getting pressed. It's like every time they want to move, they get pushed back into their original price. There's not a lot of inefficiency to it. In this whole 30 minutes, we have one fair value gap, two fair value gaps. That's terrible. You want loads. The more the merrier. Like, inefficiencies are quite literally indicative of a high probability price action. When there's none, there's nothing like clear that you can trade off of. Even if you're using order blocks, you still want to see inefficiencies being created. Like right here, where I put this order block in, create a fair value gap, that's a strong order block and a strong fair value gap now. And you need inefficiencies to be in price for high probability price action. From the man himself, ICT. We'll see if that wants to be like an immediate rebalance. No, it doesn't want to be an immediate rebalance. Ooh. ES. Sunrise. Did you seriously just wake up now? Good sunrise, Clinton. Yuck. Bad price. Open up is doing things. How's the market been treating you? It's pretty dull today. There was a black bear model, but other than that, it was a low probability one, and the price action sucks right now. To be honest, nothing of interest. we finally going to see a fair value gap form. Finally, a fair value gap. 9:54 a.m. to 9:27 a.m. consecutive green candle. Could have been, or break up to the pre-market high, could have been a trade. 9:54 to 9:27. Do you mean 9:57? $9.24 to 9:27. Oh yeah, you mean this is a break? Yeah, true. That's true. Yeah, I see that. I wasn't looking at that in real time, but that's a good PD array. Could use, yeah. Nice spooling, but still not the greatest. Okay, this low resistance liquidity's all been taken. That's our London high. Nearly been taken. And if it reaches London high, I'll be very content with it. I wouldn't even demand the rest of this being done. Because although, yes, it could technically clear out all this low resistance stuff, you know, we're coming out of bad conditions on a high risk week. So if you get this London high, be content with that and just chill. Be done. You don't need no more. So if I were to grade that move to the pre-market highs, what would I put my fib? The move from the low to the pre-market high. You would put your fib like this: low 931, high 949. Like that. Like this. If you were looking at like an implied range to deliver, then you could use the pre-market high itself. You can look at this with a swing grading concept. But if you were just looking at the move that takes out the pre-market high, with this one, because this is the first swing point from when we take out the pre-market high. Don't you love it when the Nasdaq does that? Ooh, suspension block. No problem. wonder if you grade this move. Interesting. I'll end it once we take the London high. Last week we went 5 for 5 on calls, like we called every single morning session, and 3 of that was in a live stream, 2 of those were in the Discord New York AM chat. This week I didn't call anything this morning, because it's just low probability. Last week was a nice week. This week we know it's going to be difficult. We can just take one look at that economic calendar and we know it's going to be a hard week. So that's why you don't try and push it before anything is like really clear. Today was not really clear at all because I'm overall bearish on the daily chart. I want to see us trade down into this sell side pool overall. That doesn't mean today, that doesn't mean tomorrow, that doesn't mean Wednesday, but overall, the price action on this, I'm expecting should lead to this low being taken and then all-time highs. That's my outlook. Tomorrow's video on daily bias will explain that more. Because of that, with today being Monday, no news, non-farm payroll on Wednesday, CPI on Friday, we're inside the suspension block, and we've rallied a lot higher, rejected this week before we took out the low. To me, it screamed low probability because not only are we coming out of really large ranges, we're coming out of, we've rejected the main draw, but we're in a point where it might not, run higher all the way to the all-time high. We're in the breaker, we're in the suspension block, so I don't think it's going to be allowed to run higher because overall it should take out this low. But the spooling element is still going to occur, but it's going to be held in this little spot, so it's not going to really get let loose because it's overall bearish. Those are the days that it just sucks. Like today. Silver bullet, you said landmine week is low resistance liquidity run, no? That's CPI week, but this is different because we have non-farm payroll on Wednesday, CPI on Friday, so where normally we would have non-farm payroll last week Friday, because last week was the first Friday of the month, that's when we should normally have non-farm payroll. But this week, we've got non-farm payroll on Wednesday. The reason it wasn't last week is because there was a partial US government shutdown, and that got moved to this week. So it really messes up the weekly range structure, the weekly power 3 formation, the weekly profile, whatever you want to call it. It's just not something I've really gotten used to reading. I don't know how to read those types of events because I've just not been in that situation many times before, so I don't need to push it on those weeks. That's basically the main reason. Landmine weeks in general, they're great, but it's the added disarray that we have this week. Because non-farm payroll on a Wednesday isn't usually how it should be. Daily, I feel like it will go up since it already fails to take that daily low for your anticipating. Possibly, but I think the suspension block is strong enough that it's going to be able to hold price within it, and then maybe this will be high of the week, maybe tomorrow will be high of the week, and then trade lower. But again, it's so hard to predict with the non-farm payroll on Wednesday, CPI on Friday, that I'm just not going to try until I'm taking it day by day basically. Because Monday today I said nothing, no bias 50-50. Tomorrow we'll see. Maybe tomorrow will be more obvious. But if it's not, I'll be in here again saying I'm neutral. Friday impulsive move. Yeah, Friday's gonna be an expansion day. Wednesday's gonna be an expansion day. We'll see what today's like. There's the London high. Okay, I didn't call anything this morning, so no market wizardry today. Maybe tomorrow. We've got some high impact unemployment tomorrow. That'll be hopefully a nice 2022 model in the morning. How do you know it's going to be an expansion day? Because if there's non-farm payroll, it's going to be an expansion day. And if there's CPI, it's going to be an expansion day. You can pretty much count on that. And non-farm payroll's on Wednesday, CPI's on Friday. That's pretty much it. That's how you know. And you can just look at Forex Factory for that. But that'll be it for this stream. There will be another one tomorrow, same time, same everything. So I'll see you then. Goodbye.